Hello, Mr. Layman.
Howdy doody.
Get my volume
I am
down.
sending the links that Nick sent me, and I'm not sure they're going to work.
Oh, yeah, like we got nobody in the channel right now. What the heck is going on?
I'm just now sending mine, but
Well, we can start a little late. Let me just call Nick real quick here.
he sent them in a different format. They were like buttons. They may work. I'll see when I get mine. I'll check it and see if it works. But normally, he just sends like the link.
Yeah, we had sent to our designer like a new format.
Let's see what happens here.
Oh, there's two people I can see popping in. Hey, can you send Matt just the straight links instead of the buttons?
Hang on a minute. Let me just see if it works. I think I just got mine. I sent it to myself. Let me see if it.
Okay.
No, that was just a LinkedIn from Jory saying she liked what you said about her meeting.
Huh.
You're the number one fan.
Nothing wrong with having a fan or two.
No shit. Let me see if this open.
Oh, I gotta get this down.
Yeah, it's all right.
Oh, okay.
I wanted to spend a little time talking about should am I on delay or something?
No, you're good. You know what? You maybe because you have the other link open somewhere on another
Oh,
thing.
that's right. I'm looking at last week's thing here. Let me get out of that. Try that one. Well, I got another link open that was our show from last week.
Oh, I got you.
I think I had the same shirt on. That's combustion.
It's kind of funny. Yes, we're we're connecting our website to the YouTube channel, and I was helping the guy with that. I looked back, and I tend to wear the same shirt quite often.
I do. I do too. I think when I don't see anybody, I do. I just sometimes I'll wear the same shirt 2 days in a row. And
Oh yeah.
confession,
Well,
that's kind of nasty.
I got a I got a project this weekend, which is clean out the closet. Um,
I need to
it's
do that too.
ridiculous how much clothes I have in there that I don't wear. So
Yeah, I do that too, and I look at them and go, "These things aren't even worn out," and I
no, I the
buy them on a whim.
number of T-shirts I have. But what's interesting is my son is 17 and is starting to fit into my clothes now.
Uh,
So
you got to make sure you don't leave any money in your pockets.
what was that? I think it was an Irish Spring commercial about the guy who put on a pair of pants he hadn't worn in a while and found money in the pocket, and it was like winning the finding gold or something.
It's funny, if I see a dime or a nickel on the ground, I'll pick it up. The first thing I do is I look around for more money. I see anybody see they drop $1.
I pick up penny. I have a belief that if you disrespect money, it will disrespect you.
Yeah, I do
So,
too. I pick up scratched up, upside down, tails up pennies.
oh yeah, the people, oh, don't pick it up. It's heads down. I'm like, all right, thanks for leaving it for me.
Yeah, that's right. I think if I do that a million times in my life, I'll have $100.
Yeah. Um, and then when I have a money clip and all of my bills have to be facing the same way and in order.
Yeah, you're a lame one, huh?
I'm that annoying guy that is checking out in front of you, and if you pay with cash, you get cash back, and I sit there and shuffle through all the bills.
Facing the right direction.
Got to get them facing the right direction. All right, well, let's give it like just one more minute since we sent those links out a little late. It's 12:04. got a few folks still kind of trickling in here. Oh, there's the chat. Scott Thompson, what the future of lumber contract? The new truckload is only trading 68 today and have a $10 bid ask spread, and the old car load is going up. Oh, okay. I will show that. So the easy answer is yes. The old contract is going away. People generally need to be forced into situations. So in this case, they're going to be forced into that new contract, and it will pick up more volume.
I think some of have you heard anything about the Rogers Roll guys are just, I mean, they're kind of waiting for a free pass to be able to just move everything over at some kind of comparable number. But the spread between the truck and the rail contract is like Scott's saying, it's out of whack. It's like $20 overvalued.
Yeah,
cars are undervalued.
So the thing about trading is you don't want to incur any extra expenses. So they were waiting as long as possible to have to move their contracts over. But just in the last 3 days, we saw quite a bit of volume going through the new May contract, which I believe was a lot of the Rogers Roll guys. They were just exiting the May old, like I'll call it May Legacy, and entering the May new.
Exiting the March from to May.
Well, I think that they were already out of the March, so they got out of the March at the end of January.
Oh, I see what you mean.
Yeah. It's going to be this. It's a migration over the next 2 months is what you will see, and then it doesn't matter. You start up on May 16th when the May contract's gone. It's all new truckload contract.
Yeah, it's going to be interesting to see if how many people all of a sudden have an interest in learning about futures before, when they didn't really have an interest. They think they didn't need it. I did a survey not too long ago on LinkedIn that said, why don't you use futures? This is for you people that don't use it. It was the options were, I don't need it, I don't understand it, or I just don't want to do it. And most of it was don't need it, they don't think they need it, they don't understand it. It's like 40% each.
But then if you ask them, oh, do you do contracts based off of a published price? Oh yeah, of course. Those make sense. Those are really good. And I mean, I find it kind of fascinating, because if you were to tell me we're going to let someone else price your lumber for you. Yeah. How about this? How about I walk into, let's say you're a lumber dealer. I'm going to walk into your lumber yard and I'm going to price all your wood for you. What do you think of that? What, are you crazy? You don't know what's going on in my market. Okay. Well, on the buy side, if you're buying on contract, you're letting someone else price your wood for you. So to me, it doesn't make sense, but I look at the market a little differently, I think. I believe this truckload contract is going to be fantastic.
I think that if the Southern Pine guys can figure out how to get a correlation with it and just realize that it's not apples to apples, but if you're trying to look for a long hedge or a short hedge, the markets move, the SPF in the pine market are generally going to move in the same direction. You may be a little bit off here and there, but generally, bullish trend in one is a bullish trend in the other. The bearish, and I think you could use it for a hedge, just using the contract like it is. If you were like I had a trust guy said, how can I lock in some of these prices, for 6 months? And I could. So your only option is buying the futures and just roll it.
Yeah. Here, this I think this says it all. Let's see if I can get this. Perfect. I'm going to move this up here, and what the heck? I got to share. Okay.
The power
This
is
is
on.
United States or North America at night. Okay. Where there's lights, there's people, correct? We can
You
all
see
agree.
Atlanta.
Yep. Now, the current contract is based off of wood that comes from this area right over here, which is all dark, right? And it has to get to the people, it has to go by rail car, get swapped out somehow, and get distributed. The new contract, and it's only the wood that comes out of this region up here. That's
Mhm.
that contract's
The old
based on.
contract, yeah.
The old contract. So now we talk about the new contract, and it's a truckload based. If you want to EFP, exchange for physical, what's included in the contract is all of the wood over here,
Mm-hmm.
which travels by truck to all these regions. So
Yeah, some of that stuff goes all the way to Texas from up there by truck.
absolutely. So the old contract you had to buy, it was 4 truckloads. Now, this new contract, you as a smaller player have the opportunity to buy 1 contract, exchange for physical, and get a much better delivery price from an Eastern Canadian producer onto the Eastern Seaboard into the Great Lakes. Like it's an absolute no-brainer. Absolute no-brainer.
I thought you had to take increments of 4 truckloads.
If you are going to make delivery, nobody makes delivery. There's a huge distinction between making a delivery and doing an exchange for physical.
Yeah, there's a lot of that going on today too, by the way.
Right. Exchange for physical is an agreement that you have with a counterparty where you deliver physical good, or you take, delivers the wrong word in this case. You do a transaction and wood gets sent to you. It's not a delivery through the CME's mechanism. It is a delivery that's privately negotiated between you and a producer. And then you call up your broker, and your broker offsets your futures position. If you actually take delivery, that's going through the CME's delivery mechanism, where you don't know who the counterparty is. And it happens after the expiration of the contract. And exchange for physical and EFP can happen at any time. Like you could start EFPing the May contract today. You could EFP the July contract today. I don't want to dive too deep into that. I think it's better served in a more educational environment.
Here's another interesting feature fact that I've found out among my guys. They don't even want me to talk about futures. It's just like it doesn't apply. So just don't even confuse the issue with talking about futures. And
well, they generally don't want to talk about it when it's not going in their favor, but they're more than happy to talk about it when it's an advantageous arrangement for them.
Yeah, it's a shame because there is opportunity there for them.
Oh my gosh, the opportunities are huge, absolutely huge. All right, well, we're 12 minutes into it. Let's start talking about this. I thought we'd just do the scouting report real quick first, and then we'll go to the roundtable. Is that okay, or do you want to do it the other way?
Yeah, that's fine. Yep.
So I think the big deal here that I want to talk about is your first sentence: mixed signals from housing and lumber abound. I agree. What do you think in there?
I don't think anybody knows what to do because the Fed just continues to say their goal is to choke the consumer. That's it. They want to see lower rents, which is happening. They want to see higher unemployment, which is going to happen. We've also got 10 million jobs for 5 million people looking for work. So people getting out of work are probably not going to have any trouble getting a job. But it just seems like the Fed's just there as a backdrop saying every time there's any good news, well, don't forget we still got 2 more hikes to go probably, and It's just it's like I've been talking the last couple of weeks about the lumber market is skeptically or reluctantly friendly. They're not even bullish, but they're having to be friendly to the market because their customers, the builders and DIY guys, are just they keep coming back, and they're the demand is good. And then you turn on the TV and you hear about how lousy everything is. You go, well, it does things aren't matching. It's like lumber demand is better than the media makes it sound like the economy is.
Well, yeah. So what's bad? What's lousy? Stuff is more expensive in our personal lives. Lumber's not. I mean, lumber has had a significant pullback from recent times. Um, the the cost to borrow money costs more, yeah. But otherwise, the reason all these things have inflated is because the underlying economy is pretty darn good.
Yeah, and we got a little bit of you kind of wonder if you take COVID out for 2 years, what would 2020 and 2021 have been like? We probably would have been on a trek to a little better economy, just a gradual improvement. We just got this big jolt of stimulus and panic and fear and overreaction, I think we're just now coming out of the COVID hangover, and all these adjustments like job losses and inflation, all that kind of stuff. It all happened because we just overreacted during COVID. People overhired, and they're having to lay off the panic from supply shortage, and hiring more people didn't improve the supply chain. It just had more people working with the same volume of supply. So you get after it and you go, well, shit, we didn't need those extra 6,000 people, so let's get rid of them. And so now they've got expertise in doing Google and Apple and
Well,
Meta.
they also had the opportunity to hire more people because the government gave them money to do it.
Yeah, hey, free.
There you go hire an extra 5,000 people. Here's a bunch of money to do it.
There's a thing now. You can still get up to $26,000 per employee. I think it's 26,000 for COVID relief. If you have 5 or more employees and you paid those people, you can still get non-payback benefits from the government for back pay from 2 years ago.
Really? Mm-hmm. So I think this mixed signals it's not just the Fed, it's everywhere. It's like, oh, the business is good, but the prices are more expensive. The prices are more expensive, but my wages are trailing a little bit. People like certainty, the uncertainty of is the Fed going to keep going? Are they not going to keep going? I look at the lumber market isn't that different probably right now than the equity market. The equity market is doing okay. Lumber
Yeah,
market,
and then you hear like, the equities have been down for 5 days in a row. Oh, big deal. Lumber was down for 2 weeks in a row.
Tesla has gone up 100% this year alone. I mean, that's a wild stock. But, all right, let's just say let's keep on the lumber track here. Well, you and I could get on a conversation for hours.
Yeah, you lose the crowd when you do that too. When you don't talk about lumber, you lose them. So
okay, lumber is just days away from a spring outtake increasing, or from spring outtake increase. Buyers are reluctant to accumulate normal spring inventories. Lumber is perceptively oversupplied despite strong outtake in Jan and Feb. Okay, housing should be taking it on the chin due to inflationary measures, but it is not. Home buyers' choices are limited, having to compete with buy-to-rent investors. How much do you think that the builders are still finishing up houses?
I think the spec stuff and the stuff they had sold from last year is probably coming to an end. The thing that I see differently now is more builders are production builders are building with intent entire subdivisions of 200, 250 homes, that the entire thing is going to be a rental property that they're going to keep possession of. So these are homes that are being built. And I don't know how to track the number right now, but there's thousands and thousands of homes being built right now that have no intention of being listed for sale.
Right.
So
they're never
it's
going
going
to
to
hit the
be
market.
it's going to be interesting to see when you get the inventory probably for the next, for the in March for the February data. It's probably going to show a pretty significant decline in listings and available homes for sale. And we've already seen what happens with a 0.5% or 1% pullback in mortgage rates. Just because mortgages get up to be, the Fed funds rate gets to be 7% doesn't mean a mortgage is going to be 7%. Because a lot of these buyers the builders are doing a couple of things. One is they're buying down mortgages, but they're also making their mortgages of their rental properties, their rentals connected to the longer you stay here, the more you pay, the more you can buy down your rate when you decide to buy one of the homes in our community later on. So they're kind of getting a captive audience of buyers that are just kind of built up for the future whenever they get ready to do it.
I think the housing data is going to be a little hard to read because you look at the existing home sales, which is the major portion of homes that get sold, not new homes, but existing homes. Right. And in normal times where interest, right now, if you bought a home in the last 5 years, you've got such a low interest rate that it just makes sense for you to stay where you're at. So I think the percentage of existing home sales is going to drop, which is going to look like overall home sales dropping. But the number of new homes is probably going to stay fairly good. Because
you don't have an option. People that are in existing homes don't want to get rid of that 2.75 rate, so they don't want to go anywhere.
Yeah, the mass migration we saw for the last, it accelerated in the last 3 years, but even prior to that, there was a migration from the north down to the south. Mm-hmm. It's going to slow up, probably. But as far as the new homes, I think we're still going to build a bunch of new homes.
Yeah, and what's a little is going to be like under 1 million, and I don't see any reason to build under 1 million homes. There's still demand for 1.2 million to 1.4 million if you get the price right. So it's just a matter of adjusting whatever you got to do to get the price right and keep selling them. And we talked about builders, if they've got to break even to build a house and sell it and keep their business going and keep all their framers and contractors on the job, they don't have to make tons of money. I mean, if they're making 30%, they can make 5% and still keep on going. So that's.
Let's go. Let's flip to lumber. Let's talk lumber. The tone pace at Southern Yellow Pine Mills continues to be lackluster. Supplies outpacing demand. February is finishing up on a spongy tone.
That's changing in the last couple of days.
Okay.
Since this report on Monday, there's been a significant pickup in particularly 2x6, which has been the sloppiest thing. But the treaters, as a whole, the treaters are relatively under inventoried because the boxes haven't given them big plans to work with. So there's a light spot in the Southern Pine market that is very vulnerable to the upside just when weather turns, just because the outtake of treated lumber is going to get better and truss lumber is going to get better because there's longer days to do framing. So demand's simply just going to get better for the next 4 months.
Got it. Canadian SPF, after a couple of days of harsh price cuts, SPF is seeing more activity with the mills selling and pushing order files to 313 and some 320. So 2 to 3 week order files. 2 to 3 week order files generally just you firm your price. It's not like you're jacking the price on that.
Yeah, and that's 2 to 3 weeks shipment, not order file too. There's in this market right now, the spruce market is feeding off of West Fraser. I mean, there's not a lot of wood around other than West Fraser. And there's a low guy on the porch. They think they've been at 380 all week, and Random came out at 380 to reflect that number. But you can't buy that everywhere. So it's it's getting to be a little bit. I think when it turns and pops, it's gonna be a big jolt from going from what's the dump number to back to break even number.
Gotcha. Western USKD. Yeah, they they definitely have a weather issue going on out there. Wow.
Yeah, they can't catch a break, man. Every time you turn around, there's Sierras are just pounded with snow, and you know, I sort of got to talk about a 40-inch base. Was that Greg yesterday? Maybe talk about a 40-inch base at one of those mountains up there out west. Just, I mean, it's in California or Southern California getting rain is as much as they're getting is a phenomenon too. It's a freak thing that's just never happened before. So, and
Yeah,
if you look
they're
at,
gonna fill up the reservoirs.
yeah, they're all good now.
So I mean, I guess you could say there's a little bit of a supply constraint there. Then let's jump. Euro is still a mess, trading at discounts to Canadian SPF. Looking forward, supply will decline in April and May as mills seek additional liquidity.
Yeah, we've talked about other markets that, I mean, the U.S. is the favored market for volume, but it's not the favored market for price anymore. There's other places like, you know, Africa and other places in Europe, and that are paying more for the product, so that they have other options in Japan. And you know, you start getting down to, you know, $350, you can, you know, China comes back in the picture for, you know, for a user of the product too. So
Well, we definitely, I think we will see a pickup in the Chinese takeaway. Sorry, OSB buyers are sneaking in extra OSB. Boy, OSB just keeps going boom down to that, what it seems like a base level, and it pops a little bit off of it and right back to it.
yeah, 220, 230, 220, 230, 220, 230, just back and forth.
Yeah, and it's like there's bid. Well, we see it, you know, day to day in our business. There's plenty of bids below where the mills want to go, and the mills aren't going there. So I don't think
they got to be accumulating wood. I would think they've got to be accumulating some inventory without the force feeding of the contracts to the boxes. That they're obviously taking less. That's just more wood that's on the market. But the thing about that is like we saw Lowe's and Home Depot last couple of years, particularly Home Depot, because they must have had larger contracts, but become the primary source of supply during the summer. And I'm not sure that was if they made money on that or however it was, but it was probably a pain in the butt for them to have to get rid of their contracts to local lumber yards. So it probably just backed off some of the contracts just because they just don't need as much as they had.
Let's jump over to the FDPs. I think we're going to talk.
Go to go to the other sheet that I sent you, because I made an adjusted FDP.
Well, before we do that, let's talk about this one and then why you adjusted.
Okay.
Perfect. So what do we got here?
That one, that chart didn't show the full. We didn't adjust it to show the full range of motion for the current year. But basically, what you can see from these is they've almost all of the FDPs for the last 3 or 4 have moved counter cyclically to what the trend was, and it looks like just a miss after miss after miss. But the FDPs they're not signs of directions. They're just points when the market should either gain momentum of its current direction or reverse direction. And one of the things that I used to do and stopped doing because it requires, you know, being more in tune with the market on a daily basis, which I am, and I can do this. But if you move those, when I first started doing the FTPs, it was a bunch of papers I held up to the light, said if you move it over a little bit, this year over a little bit to the left, it lines up with last year. You move this one a little bit to the right, it lines up with the whole big picture. But the FTPs requires a periodic adjustment, which you'll see on the next thing we're going to show. It more lines up. And basically, it adjusts the FTPs for the delay in spring preparation that we have this year. So it basically backed up or moved the FTPs forward about 4 or 5 weeks, and you can see how much more they line up from what's actually happened, because it's a big difference in a year when the market peaks in March like we had last year, and then you come into March this year and you're making all-time low kind of things, and not all-time lows, but lower lows. So the expectation is we're going to have a peak in May, and this more aligns with that kind of peak in May type thing. So it's just adjusted so they're more in alignment with each other.
So this is saying week 10 is an FDP.
Yeah, week 10 should be a reversal low. So next week.
Week 10 is next week.
Mm-hmm.
And then what you're looking, theoretically, you're going to see about 6 weeks of increase in price.
Yeah, that should take us to the end of April, 1st of May.
Which corresponds to a building of inventory for spring needs.
And it basically just shows that that 10 to 15 FTP there shows that it's a time when the market organically increases its outtake. The only reason to think that's not going to happen is if the market were to be overbought, which I don't think anybody thinks that it is overbought. The only the biggest concern that I have about where inventories are is so many of these large contractor yards, LBM dealers, have pre-bought multifamily packages and have them on the yard, and they've been holding them since the first of the year and the end of last year, and so they don't appear to be worried about cash expenditures but space is an issue. A lot of guys have got a lot of wood on the ground and it's sold. They don't have room to put any other product on the yard at these lower prices, but yeah, that's not everybody. I'd say as a general rule, the subscribers to Layman's Guide have a longer inventory, a bigger inventory than the general market share. Most of them that I've talked to, all of them I've talked to, are covered through April and now trying to cover through May. And the reason is they want to cut off that wave that goes up from week number 10 to 15. You get on the back side of that, you get covered through May, then you can miss if there is a rally coming, you can miss that and be able to buy back in on the back side of it.
So let me understand what you're saying here. I guess what could be different? Let's say week 10, decision point. You go, great, I'm going to start building inventory. Are you saying that the inventories already could be in the on the shelf?
I think there's some inventory that's already bought, but I'm not sure it's for the spring. I think it's more for summer and early fall. I mean, I've heard jobs that are being bought out through September and the end of the year that people were buying for 9 months or 12 months out, just because the investors or the buyers were willing to pay for storage and or even prepay for the product, but mostly just pay for the storage and for the length of time you got to keep it. And I've seen a lot of really full lumber yards with papers getting torn off the lumber because it's been sitting there for a while. It's getting handled, and some of the stuff just parked on the back of the lot and not being, first in, first out, kind of rotated. So
what you're saying is there's inventory that's already sold. The yards may have less spec inventory, more sold inventory.
Right. They may look like they're full, but it's not. They're not as full as they look.
So what does that do for this chart?
It makes what happens after week number 15 a really good possibility.
Okay. So let's say I'm managing an inventory right now. What's my thought process? You can't sell from an empty shelf. So
and everybody says, what would you do? Like a guy asked me a couple of months ago, if you had $1 million, would you invest it in lumber right now? And I said, yes, I would. That doesn't mean you should. That just means that I'm a risk taker, and I would bet on the market being better. And if you look back from that week number 49 to week number 52, week number 49 was before we adjusted it. It was an up period, and typically the end of the year is an up period, and I'm betting on the FTP's 86% accuracy, especially when you get it adjusted correctly. But from from right now, it seems particularly easy because lumber prices are very inexpensive. They're below mill cost. That doesn't mean anything. I mean, it's your curtailments are always bearish. Producers aren't trying to create a shortage of a product. They're just trying to find what's the equilibrium. So how much do I have to cut back before it's break even for sales and production. So, but the lumber industry on the buy side acts as though there's going to be a supply shortage, but that just never happens. We just get to an equilibrium point, and then you get to a seasonal place where we get seasonally stronger output than normal. I mean, not the normal than just what the previous months have been, which is where we are right now. I think time changes next weekend, and heard a guy tell me yesterday he thought that the daylight saving time was going to be here to stay after this year. But
Might be. So basically, next call it 6 to 8 weeks. It's probably better to have more wood than less wood.
yeah, I would if it was me and it was at my yard and I was looking at my inventory, I would want to have wood bought through the end of May because I don't want to have to be buying at the top of this potential cycle. You don't want to be buying in April at a higher price. So I mean, it's kind of a no-brainer to buy it down here for for a seasonal pop and just buy it through that pop to the end of May, and then look to replace at thinner inventories going into the summer, and look to buy it at lower prices than where the peaks were, right kind of back to where we are now maybe.
Yeah, look, that makes sense. Have a 3 month order or a 3 month inventory, and then April 1st or April 15th, May 1st. Let's take a look at it. See where we're at.
Well, if you're not going to get beat on price buying $360 2x4 spruce or $400 2x4 pine. You're going to get beat because you're not going to get beat. You're just going to miss orders because the business isn't there. But it may mean you end up holding inventory a little bit longer to get rid of it. But the speculative play with the odds-on bet is that we're going to rally between now and the end of April, 1st of May, and you want to buy through that cycle to not have to be buying until the market's had 3 or 4 down weeks and you can get a better price.
Yeah, and when you look at the lumber charts, like the lumber futures chart, it says about the same thing. We're definitely closer to a bottom than we are to a top.
Yeah, we keep saying that, but every day you turn around, futures is down another $20.
Yeah. Let's jump in and talk about the monthly member roundtable summary. This happened last Friday. I was on the call.
Why don't you talk about that? Tell me what you heard.
A lot of contradictory, same thing. Certain segments are busy and, I think surprisingly busy. And then others are, I wish we had a little more going on. I can tell you at Materials Exchange, we have more interest from sellers right now. So I think there's definitely, they've got, the phone isn't ringing so much at the mills. So this is interesting. Curtailments are always bearish. I've learned that firsthand. It's never the first curtailment you want to jump on. It's the last curtailment. You never know that.
Yeah, you don't know when that is, though.
But it's
almost right now, though. You can tell that like we're in the probably not the height or peak of curtailments, but we're certainly in the middle of curtailments at a time when demand is going to go the other way. So supply is going down and demand's getting ready to go up. So there's got to be there's a divergence in the process.
This one's great. Producers are trying to find equilibrium, not create a shortage. Yeah, of course. They want to run. They want to run because the more they run, it lowers their cost. But they obviously know that you can't make up for losing money by making more.
Right.
So, I think you're right. They just want to find that nice spot. Buyers are not fearful of a supply shortage. It seems, I think I agree. They're probably keeping a little lighter inventory than normal. It seems like the buy side just keeps getting bailed out. If you miss the buy and the market runs, wait 4 weeks, and all of a sudden you can start buying back in where
Yeah,
you
it
were.
seems like the wholesale distributors are the ones that probably get caught in this yo-yo more than anybody else because they buy for a run and build some inventory and then it peaks and then they got to start being competitive against brokers and mills with lower prices. And I would think probably wholesale distributors had when the mills are being kind of replacing them as the distribution outlet, it makes it tough for them. So it's
And I think the lumber guy members, they're having a higher inventory than normal, which is a good thing. Look, if you divide the spectrum of lumber prices up, we're probably in the lower quartile or lower third. So your downside risk is definitely less than your upside.
yeah, the odds are in your favor to have a little extra.
And buyers are skeptically friendly, however, stopping short of outright bullish, despite more quoting, more orders. I think everybody across the entire housing market is probably pleasantly surprised things aren't worse than they are.
Yeah.
And because in the news they talk about, oh, your home price, the price of your home, the biggest asset that most Americans have is under pressure. Well, that means nothing about a new home. And if you're a new home builder, maybe your material costs are less, maybe your margin's a little lower, you're still making money.
Well, look at how much did home prices appreciate last year? 20%.
Yeah,
It's ridiculous, ridiculous. I mean, we could easily reset home prices by 15% and still be 5% gain on the year. And you hate it for the people that ended up paying that top price of that 20% increase, but they're gonna probably give a little back. But that surge in growth last year just isn't sustainable. So we just need to get back to more of a 4 or 5% a year pace appreciation, and that's going to require giving back some of last year's gain.
Builders developing entire neighborhoods for rental, never listing the homes. You know what? Hey, that's reality. As rents go higher, investors in housing can make money. They're going to build a house and rent it out.
What's interesting now is the builders instead of the builders building for investors, builders are building and getting into the rental business themselves. They're not even selling them. They're just keeping the product and making offers to the buyers. Like if you rent my property today and pay my rental for 2 years, 3 years, whatever it is, the longer you stay, the more we're going to buy your rate down for you. So
I think what's interesting here, there's a difference between a developer and an investor. A developer takes a piece of property and makes it worth more and then sells it off. Mm-hmm. They're playing with other people's money. Most cases, they're borrowing money to do this. Investors have the money and they go in and they buy the asset in whole with cash, and then they're not living off, but their return is the rental income over a long period of time. So when you have a company, a fund like BlackRock doesn't go to the bank to get money. BlackRock takes in investment and then reallocates that asset. And what they've done is they've gone in and bought rental units or rental houses.
Yeah, the difference between a builder keeping that product and selling it as an investor to an investor, the builder's rental-based cost is going to be lower than the investor-based cost because they didn't have to. The investor's got to pay something, pay a profit to get it, but the builder's got his just base cost of his build cost in there for his basis. So they got an advantage over the investor.
Oh, and my point was the investor doesn't need to rent the money, doesn't need to borrow the money. Interest rates aren't a real factor for him.
Right.
So I think, my view on this, we're going to see rates a little higher, a little longer. I think housing market's going to be a little better than everyone expected. It's not going to be a lumber market where you can just across the board buy or across the board not buy. I think you have to pick and, you have to be crafty and, buy the undervalued, hold off on the overvalued, maybe switch species, switch items a little bit. There's opportunities in here. You just have to be crafty.
Yeah, and I think that switching species is something you mentioned, but as you just touched on, is more and more people are are accepting Southern Pine because it's a better looking product. The mills are doing a better job of they found that prime grade that the boxes like to have is in good demand. And I heard a guy mention the other day that with the boxes like Home Depot and Lowe's going after the pro dealer, they think they can sell a crappier product, but that's not going to happen. Still got the same product on the shelf, and they're not going to have a number two that's got a half-inch of wane on it and mixed in with their prime square edge stuff. It's going to look more like what you got in your background right there.
I've never run a lumber yard, so I can't speak from that experience. But sitting where I sit, we look at the Euro product. When Euro's a discount, if you have that flexibility that you can bring that product in, that's great. We just about an hour ago, I heard back from a guy who bought Euro for the first time up in Wisconsin, and he said it looked great. And now that's in his quiver that he can bring Euro.
That's about as far from a port as you can get.
Yeah. So I think adding in flexibility. Here's the deal: if you don't add in flexibility and your competition has, who's got the advantage?
Yeah. Got to play the game.
Got to play the game. All right. Thanks, Matt. Appreciate the.
Thank you, guys. And for John, you're not the only one here. You're just the only one that asked.
Yeah. No, I think he came in on LinkedIn. I can see that. We had more people in on YouTube today. Scott Thompson.
Just for curiosity, is that you get more participation off YouTube than you do LinkedIn normally?
We do. Yep. I think it's just easier because you don't have to log in through LinkedIn.
Yeah. I've noticed also that on your website, you can go to your website on LinkedIn and you don't have to log in because it is playing live on your site when you start anyway. You don't really need that. You don't really need that login.
Oh, excellent. All right. Well, next week Ash will be back, but in the meantime, Matt, appreciate it. All the subscribers will get the full report tomorrow. Alan Taylor, good show, guys. Thank you, Alan. We'll see you guys all next week, next Tuesday. Greg Kuda's back from a fishing trip. He and I will cover the futures market on Tuesday. Ashley will talk with Greg Riley and Matt Beamer on Wednesdays about the market, and you'll be back next Thursday.
If you're up north, stay warm. You're in the south, stay dry.
Take care. All right.